It's Amphyfx here. You're welcome to my YouTube channel. So today I'm going to be talking about how you guys or how beginners can read what can begin to read the charts in less than what in less than 1 hour. So if you're new to my YouTube channel, please don't forget to hit the like button and subscribe to my YouTube channel. If you are first, this is how you do it. The first thing you do is go to a higher time frame of, let's say, weekly time frame. Then on the weekly time frame, you would observe where the market is going. Normally, the market move in what? Market moves in fractals. We have higher high, higher low, higher high, higher low, higher high. Right? So the market moves in fractals. Now this is the textbook example of what how the market moves. But in reality, markets will not give you like a clean structure like this. But you see that it actually moves this way because it's what keep breaking structures, break of structure, right? Break of structure to keep breaking structure towards to the outside, right? So this is what we call break of structure. When a high, now this is a high, higher low, higher higher low, higher high. So when a recent high is being taken out, we call it what? A break of structure, right? That's a break of structure. That's to the outside. That's in an uptrend. But if it is in a downtrend, we have what? Low, lower high, lower low, lower high, lower low, right? So market breaking structure to the downside, break of structure to the downside, keep getting what? Break of structure to the downside, right? So this is how what market moves in fractals, either higher highs, higher lows, or what? Lows, lower highs, and lower lows, right? So that's that. Now let's jump on the chart. Now I'm on the weekly what? I'm on the weekly time frame, right? I'm on the weekly time frame. I'm looking at this structure. This is what clearly bullish, giving us what a high what a higher high, higher low, right? So I'm anticipating that market what should come and take out this liquidity zone here. There is what we call liquidity. So as market is bouncing from this other block here, also there is what we call other block. You can watch my videos, or like you can look for other block video on my YouTube channel. Now we had what this is our recent break of structure here, a break of structure, and then market bouncing from this other block here, right? So as market bounce from here, we're anticipating markets will to come and take out to come and take out this liquidity here. So this is what we're anticipating here. Market will do something like this to come and take out this, and then we'll retrace back and then push high again. Now let's go to the daily. Then on the daily, we can refine that zone, right? We can refine the zone on the daily. So we can refine the other block on the daily. So this is where markets reacted from on the daily time frame. Now looking at here, there's what we call supply. We have demand. The demand is where market is buying from, and supply is where market is what likely going to sell from. So we have to take note of this supply zone here. So there is a possibility if market gets here, right? Market might react or pull back from this zone. So we have to take note of what? Take note of this supply zone. If market gets here, look for what? Reaction for a possible pullback, right? So that's that. And why do I think this zone might react? Might give us what? A liquidity close to that supply zone. This is a liquidity zone. So we had a liquidity close to that supply zone. Now let's go to a lower time frame of 4 hours. And then on the 4 hours, you can see we're having what break of structure, and that break of structure here, and that break of structure, and that break of structure. So higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Break of structure. And this was the last break of structure. But markets aggressively dumped because markets was giving us several all-time highs. So there has to be what a correctional movement. So that's why we had this what aggressive dump. But upon dumping, we had what a structure shift here. This is what a structure shift. So structure shifts and then what another block. Then there's what another block here. That's a 4 hour what other block. That's where market is currently what reacting from now. So this is where market reacted to this 4 hour other block here. So market is reacting from this 4 hour other block. Let's go to a more lower time frame of 2 hours. So on the 2 hours, we can see the market is what market is bullish, right? Market is bullish. We had the last break of structure on the 2 hour. This is the last break of structure before market taps into this one, into this other block. We had what a structure shift, right? Had a structure shift, market structure shift. So and after a market structure shift, you look for what the origin that give rise to that what that structure shift. So market might bounce all the way down here or decide to react from any of these other blocks here. So all these other blocks are what they are valid. So it depends on which one the market wants to use, right? So that's that. It's easy. Just whenever a high is taken out, you observe that zone for what a break of structure. So the first thing I said is what we go to our weekly time frame, right? To mark out what to look for the market direction, right? Then the daily to look for possible what to look for possible uh for possible blockades or anything that can hinder what that movement of the market, right? That's why I said we have the supply zone here. So on the 4 hours we had a structure shift and then what 4 hour other block which I marked out here, and then market came and reacted to it, and I said on the 2 hour we had. So guys, if you learned something from this video, don't forget to hit the like button and subscribe to my YouTube channel. And if you want to join my free Telegram channel, you can find the link in the description below, guys. See you in my next video, guys. Peace out. It's Amphyfx here, guys.